Deposit betas have been at historic lows. So basically, people are either too lazy to move their money or they just don't care.
Recently there have been a lot of companies like Apple, like Ford, like GM that have come out with these new savings vehicles that are it's like cash, but then you look at it closer and it's high yield. And people are feeling that like if it's not equity, it could be, it's safe. And what are your thoughts on companies like Apple or Ford for sure that have these high yield savings? It's just like a bank, but it's not insured. What are your thoughts on some of those things that are coming out now?
I think they're a real threat I think investors are finally or just savers are finally waking up to the fact that there's a higher yield. We spent 12 or 13 years in a zero interest rate environment. So it didn't matter if you were getting 5 bips in a checking account versus, 50 bips in a short-term treasury or money market or CD or whatever it may be. Last summer it ticks to 2. We saw a little bit of interest last fall, 3, a little bit more interest. Winter 4%. Now we're at 5% throughout the first 6 months of the US T-bill curve. And people are waking up to the fact that there are other alternatives out there. I don't have to take any credit risk. I don't have to take any duration risk. And it just amazes me still to this day that banks are paying 3.5 to 4% on a CD with the same equivalent maturity as a treasury. So you're sacrificing liquidity and you're getting almost 25% less return. It also amazes me that money market managers are charging 10 or 20 basis points basically to ladder 3 months worth of T-bills.
Mm-hmm.
And so there's other alternatives out there, and we're seeing a lot of investor interest, particularly in corporate accounts where they're sitting and they need these are operating accounts where they need
Sure.
to be sitting on a lot of cash, but they're finally waking up to the fact that there's yield out there. So I think Apple is doing the investing public a service by doing this, and I don't think that would be risky at all. Arguably, Apple's balance sheet is stronger than the United States government. So uh,
Right.
There's there's kind of two things to think about when you think about those situations. One, I think Apple, if you read in the journal last week, or maybe it was earlier this week, some clients or customers are upset because they can't get their money back. I think that actually Goldman Sachs that does some of the back office there, and they're having a hard time. Actually, like if a customer wants, liquidity to buy a house or whatever, operationally they haven't been able to get the money back, which I don't think that's necessarily a good thing. I don't know that there's an issue with that from a kind of funding perspective. But I think more broadly, when you think about it, how does this impact society and the economy? The Fed, in raising rates, has been trying to essentially tighten financial or monetary policy by reducing the amount of cash that's flowing through the economy. And with as we see banks, they call it deposit beta, so they aren't raising deposit pricing as quickly as the Fed is raising interest rates. And deposit betas have been at historic lows. So basically, people are either too lazy to move their money or they just don't care. And by leaving that money in the banks at extremely low rates, it's providing more liquidity to society than what the Fed really wants there to be in circulation. And so we need to find that gap needs to close in order for us to kind of right size the economic, I would say, drivers or the fuel that's driving the economy today. And as that gap right sizes, I think some of the people that are going to be, or some of the companies that are going to be hurt by this are the regional banks, because regional banks essentially borrow short and lend long.
Mm-hmm.
And a lot of their longer term lending is fixed for a period of time.
Mm-hmm.
So if their borrowings become more expensive, the spread between what they make and what they borrow at becomes smaller. and ultimately could go negative, which is a really bad thing for regional banks. And that kind of filters through the rest of the economy, because many regional banks are the financing mechanism for small and medium-sized businesses. So as we see some of these changes kind of rolling through the economy, they're not happening overnight, but we can see a path to where things could get much more difficult for many Main Street companies and many people on Main Street than what it probably is right now.
Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.